Hello everyone and welcome once again to the OANDA Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Now it's been a couple of weeks since our last video. I don't really need to tell everyone at this stage what the main story I guess over the last couple of weeks has been. It's been Brexit, it's been the EU referendum, the UK voting to leave the European Union to the surprise of many, including myself. I was one of the many claiming that it was going to be a comfortable win for the Remain side, and I, like many others, were very surprised when Vote Leave actually managed to win the referendum by 52% to 48%. The markets, of course, also very much in the belief that it was going to be a comfortable win for Remain. We saw the pound trading at the highest levels in 2016 ahead of the results. We saw the equity markets as well quite extended. Clearly, like I say, there was this belief that there was going to be a comfortable vote to Remain, but that's all gone now, I guess, and we have seen that major reaction in the markets that we were anticipating as a result of that. The pound, of course, falling back towards the low 130s. It has stabilised somewhat around these levels, but there could potentially be more downside to come. I guess what happens next all depends on how the political situation resolved and if and when Article 50 is actually invoked, which would actually begin the negotiations between the UK and the EU over untangling the UK from the European Union and then deciding what the new relationship between the two is going to look like. So there's still so much unknowns and so much uncertainty hanging over the UK right now, and I expect that to continue for some time. For some time yet. Like I say, it's all about the next hurdle is going to be the political situation. Again, so much political instability in the UK. We've got to get a new leader of the Conservative Party and the de facto new Prime Minister. There's still unknown about what will happen, both from that perspective, but also what the team beneath them will look like. There's some very different candidates put themselves forward for this role, and as we've seen already, while Theresa May is currently in the lead, and she actually, I believe, voted Remain, although she was very quiet on this at the time. We haven't had a favourite win the Tory leadership challenge since the 50s, so it would seem, even though she's favoured at this stage, that the odds would suggest that she's unlikely. But as we've seen over the past few weeks, the odds don't always really count for too much. Sometimes they're very accurate and other times they're extremely off. There's also the opposition leadership issues. The vote of no confidence for Jeremy Corbyn, the leader of the Labour Party. He does seem to have got the backing, though, from the people who gave him the job in the first place as leader of the opposition. So again, I think it's going to be there's going to be a lot of turmoil around the political situation in the UK, which isn't going to help really the stabilisation side of things. Mark Carney, Governor of the Bank of England, has done his part so far to keep the markets calm coming out the day of the referendum result. And seeking to calm the market, saying that there'll be plenty of credit made available to the banks so that we don't get anything like the credit crunch we had back in 2008. We've also heard from him since then, suggested that we could be looking at an interest rate cut this summer again to support the economy. George Osborne has already faced the media on a few occasions as well, suggesting that he's going to push for things like corporation tax cuts to below 15% to make it the most competitive amongst most of the major nations. The only one that would fall short of this then would be Ireland. And again, this is just a way of encouraging business to come to the UK, do business in the UK, business-friendly environment, in order to try and support the economy during this what could be a very difficult period. So again, this situation is going to linger, and while the main event so far is out the way, I do think this is going to continue to tick on in the background. It's going to continue to really dominate in many ways how the markets are going to respond. Like I say, they have seemed to have found their footing somewhat over the last week or so, but it's not going to take much, I don't think, to create a bit of a frenzy over the next 6 to 12 months. This week, though, is going to be a very busy week outside of the UK as well. We've got, of course, with the Australian elections over the weekend, and that's looking like a hung parliament at this stage. It looks as though we're going to see negotiations between the two major parties and some of the more junior parties and independent party members from the election in order to try and form a majority government. So we could see some political instability in Australia in the coming weeks. Although we are seeing the Australian dollar trading slightly higher today, one of the better performing currencies, the ASX as well. Also ended on a positive note, so it was on a positive note earlier in the session. I believe it ended about 0.75% higher, so this doesn't seem to have impacted investor sentiment in Australia too much at this stage. But again, it's going to be a big week for Australia, as well as the negotiations which are likely to take place. We've also got the RBA decision to come tomorrow. We've got retail sales, we've got trade balance data as well to come from Australia overnight tonight. So and again, a big week for Australia as well as elsewhere. And also this week we've got the US jobs report to come as well. That's on Friday. So the US never that far from the radar. It would appear, at least for now, that we've seen the possibility or the probability of a US rate hike this year. The markets have now factored out completely, quite considerably as well. The markets, of course, have been wrong very, very recently, so you can't always read too much into that. It'll be interesting to see what the murmurings are from the Federal Reserve over the next few weeks on their view on this, whether they're going to see how Brexit plays out in the next few months before making a decision, or whether they are just going to push it back to 2017. What is likely, though, at this stage, very likely, I'd say at this stage, is that July is now comfortably off the table. I think it'd take a very, very bold move by the Federal Reserve to bypass the impact of Brexit and just continue on with the rate hikes at a time when there's so much uncertainty and so many unknowns. So I think that's one area where the market's probably got it right. So some big events to come this week. As far as today is concerned, though, it's the Independence Day in the US, so we do have a bank holiday. Markets are closed in the US, so it's a very quiet day here. The construction PMI from the UK was extremely weak, fell to the lowest, I believe, in around 7 or 8 years. And again, this just reflected, and this was actually for June, so this actually reflected the uncertainty ahead of the actual result. So it'll be interesting to see what kind of number we can see there next month, now that construction sector is likely, especially in the early stages, to be one of the more heavily hit. It does only constitute around 6% of UK GDP, but that is still a big enough percentage to give us an early inclination of to how the rest of the economy may be affected, but also enough to create a significant slowdown or even recession in the short to medium term. We also had the Sensex investor confidence number from the Eurozone, which was very weak as well. But like I say, overall, quite a slow day today. It's been quite a slow day overall in the market so far. I expect that to continue to be the same, like I say, because of that bank holiday in the US, with things starting to pick up again tomorrow and again for the rest of the week. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.